Hello, everyone. Thanks so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. And thanks for our listeners jumping on the call. We saw the Nasdaq and the Russell 2000 up about one, down one. We saw the S&P 500. That was up about 0.3%. Sector performance, who are the leaders? We saw technology up about 2.4%, followed by energy up about 1.5%. On the downside, that was led by utilities off about 4.5%, and then healthcare down about 2.8%. From a commodity standpoint, we saw crude oil, that was up about 2.8%. As OPEC kept output unchanged for the first quarter of 2026, some downtrends still persist in that side of the oil market. If we look at gold and cryptocurrencies, they were slightly lower. Fixed income, we saw U.S. Treasuries, they rose despite some data suggesting some rate cuts. We saw some concerns surge in the corporate debt issuance market and Japan's potential rate hike risk decoupling or unwinding that carry trade. If we look at the labor market, pretty mixed signals. We saw the ADP report that was down about 32,000 jobs in November. That was historically diverges from the official data. But on the weekly jobless claims, that was at a 3-year low. But the Chicago Fed unemployment, that was pretty steady at about 4.4%. But continuing claims remain elevated. Keep in mind that elevation might cause the unemployment rate to inch up over time. We look at inflation and sentiment numbers. We saw Core PCE in September. That was a positive 0.2 months over month, about 2.8% year over year. That was better than expected. We look at the consumer sentiment number. That was up for the first time in 5 months. Inflation expectations. For a 1-year standpoint, they rolled out at about 4.1%. For a 5 to 10-year period, about a 3.2%. That's the lowest since January for those readings. Consumer and manufacturing. Black Friday, the consumer was out. They were spending online. We saw those sales up about 9%. The ISM manufacturing PMI numbers, they contracted for the 9th month. And the services PMI, that was 52.6. That was little changed. Unemployment was pretty subdued. We did see some input prices elevated. Globally, going overseas, what developments came up over in China. We saw the PMI survey that slipped into contraction territory. That was caused by some weak domestic demand. Over in the UK, we saw some easing capital requirements for lenders. That was the first time since the GFC. And if we look over in Japan, they had a strong hint of some rate hikes. The odds for December 19th are at 80-odd%. Now, that kind of left us for this week. What are we going to be looking at? I think it's the Fed. The Fed's going to be in focus on Wednesday. They're expected to cut rates by 25 basis points. That's going to put them in a range of about 3.5 to 3.75. And the futures are implying the probability will be about 90% that they'll do that. Concern? Well, if they don't do that, how's the market going to react? If they do too much, how does the market react? Are they over concerned with slowing economy? And that's why they're cutting more. We'll just have to see if they come in at that 25. But we did see some division among the policymakers. 5 of the 12 FOMC voters were pretty skeptical about further easing with inflation concerns. And 3 board of governors members favored a rate cut. U.S. economic calendar. Tuesday, we're going to be looking at a delayed September JOLTS job openings. We'll be looking at later in the week auction for the 10 and 30-year Treasury and corporate earnings with 2 AI tech area behemoths, if you might. We got Oracle and Broadcom coming out, probably setting the tone for that whole tech AI sector. Globally, we'll see some central banks. We've got the Reserve Bank of Australia. They're expected to hold rates steady at about 3.6%. They still got a pretty solid economy over there, heating up pretty good. Over in Bank in Canada, they're expected to keep rates at about 2.25%. We saw some labor market resilience despite some U.S. tariffs. And then kind of wrapping it up, we'll look at China, their inflation, some trade balance figures will be coming out during the week. Jeremy?
Thank you, Graham. I had a question for you. So how do you see generally the markets doing kind of going into the end of this year, last 3 weeks of the year, and then into the first quarter next year?
Yeah, I think right now it could be pretty quiet, hopefully, right? As we go into the holiday, maybe you lift a little bit. You could always throw in some drama. Yeah, anything could really happen. But generally, this time of the year, as we get closer to the holidays, things kind of quiet down a little bit. Maybe some tax loss selling to offset the gains with some losses. So you might see certain sectors, bonds, things that have underperformed maybe drift down a little bit, while the stuff that has outperformed stay elevated because people don't want to take those gains. Keep in mind that usually November all the way to tax time and slightly after that, that's usually one of the best times in the market. So we'll have to see if that holds true this time, at least through the holidays. I know we got some pretty good volatility. That's an understatement when we had that tariff talk within the first quarter of last year.
Gotcha. Well, we always appreciate the information and expertise, Graham, and thank you to our listeners who have been checking in with us every single week this year and through the end of the year, and we look forward to seeing you next week.
Take care.